Vancouver Resource Investment Conference, day one, ladies and gentlemen, and we are at the booth of Uranium. And Jeff Klenda, the founder and CEO, wants to give us an insight into his beautiful company. Good morning.
Good morning. Thank you for having me. I appreciate it.
Thanks for taking the time. You are one of the last, I would say, uranium producer unicorns.
Survivors. Yes, that's
in
right.
the US, actually. I think your company is really prominent. But anyway, maybe you give us a short overview about the company, please, for our viewers in Germany.
We started the company about 15 years ago as one of the original founders. Since that time, we've taken our Lost Creek property from a greenfields project all the way through to production. And as a matter of fact, in August of last year, we celebrated our 5th year of production. And the thing that I'm particularly proud of is that during that time, we've emerged as the lowest cost producer across all publicly traded companies globally.
Wow.
Not the second lowest, we are the lowest. There's only one company that gets to say that, by the way, that's us.
Okay, fantastic. When you say you are at the lowest cost, what does it mean per pound all in?
Well, for us, when we, it's a matter, there's an inversion ratio there where the more we produce, the lower our cost. And so in 2015 and 16, when we were producing more because the prices were higher, our costs were coming down into the $16, $17 range. And in terms of the C1 cash costs, all-in costs were coming in at about $26 a pound. So what we anticipate is that if we are incentivized to increase production to 1 million to 2 million pounds a year, we think that we can reduce that pricing still further. And so we hope that we're going to get the opportunity to demonstrate that at some point in the near future.
Fantastic. Before we come to the petition 232, because I think this is the thing you are referring on, what are reserves and resources, meaning let's assume you can really enlarge the production, things go well. How long can you do that?
Well, for the next 2 to 3 years, if we were to ramp up production and wanted to ramp from 1 million pounds a year at Lost Creek to a second 1 million pounds a year at our second project, Shirley Basin, it would take us about 2 years to 2.5 years to be able to ramp to a full 2 million pounds a year. We can sustain that for at least 10 years. Now, across our 3 most prominent properties, we have nearly 50 million pounds in reserves, but we have a tremendous amount of scalability. We can build those resources, we can build them quickly. No one's been able to really justify spending the money on exploration over the course of the last couple of years, so neither have we, but we'd love to have the opportunity to do that, and if we do, then we can continue to grow the resources. But right now, 50 million pounds is adequate, and we can sustain 2 million pounds for 10 years.
No, I think that you've done absolutely right, because why should you burn your treasury when it makes no sense?
And actually what we've been doing is that we had the foresight to put long-term contracts in place all the way back in 2011 through 2015, which has sustained us extremely well. We've been able to generate cash flows. We've been a positively cash flowing company for the last 3 years consecutively, which we are very, very proud of, considering how difficult and challenging the space has been, as you well know. So we're very proud of the fact that we've actually had revenues, but what we've been doing is we've been leaving our pounds in the ground, buying the pounds at very low cost in the marketplace and delivering them into our contracts, and the margins have been fantastic.
Yeah, absolutely. Can you elaborate a bit on the margins?
Yeah, what we, for example, in 2017, we bought about 2/3 of our pounds, came to a little over 500,000 pounds, and we delivered them into $49 contracts, but we bought the pounds at $21 in the marketplace.
That's a lovely margin,
so
I would
realizing
say.
$28 margins in a $21 spot market.
Super.
So, I mean, we're actually realizing larger margins in the spot price. In 2017, I should have said 16 in the first year, but in 17 last year, the year before last, we actually, our average cost was $24 a pound, and we were delivering once again into $49 contracts, so $25 margins. And then, and we've done the same thing again this year. We have purchased all of our pounds for delivery this year, about 500,000 pounds in 2019, and we will deliver them into our contracts, and our cost this year about $26.
Great, and the selling price?
Selling price, again, about $49.
Super, so you still make money, you are safe and sound, I would call it.
And my pounds stay in the ground.
Exactly, and you have still this beautiful production facility, which you can easily maintain, I could imagine.
We built this from the ground up. We have kept our operational staff on, and in preparation for what we hope is going to be a successful outcome on our trade action that we brought about a year ago in January of 2018.
Fantastic. What uranium price would you make you to say, okay, now we switch it on again?
Well, that's really the $64,000 question, and what we mean by that is that the thing is that you can't just look at it in terms of what my costs are. I have to look at it in terms of what the CapEx is to be able to ramp up production. And it's not just about getting to 1 million or 2 million pounds a year. It's about sustaining that level of production.
Yeah.
And if you're going to enter into long-term contracts with the utilities, they're going to be expecting that we maintain that production for at least a 7, 8, 10-year period of time. So we have to not only get there, we have to stay there, and we have to be a solid producer, and we have to make sure that we can deliver into our contracts. We don't want to break any promises out there in the marketplace.
That's right. But I mean, what uranium price you could imagine you could restart?
I think that for us, what we need to see is, I think that we did, Cameco, I think Tim Gitzel said it best. He came out a couple of months ago and he said that in order for them to restart their operations in the United States, he was looking for roughly $60 contracts.
Ooh, that's a long way to go.
Well, it's a long way to go, but the fact is that we've got problems in the United States. As you well know, we have become incredibly dependent on Russia, Kazakhstan, Uzbekistan, and increasingly
like,
China.
What is it, 45% of delivery,
About
is it?
40, and almost 45%, because now that MacArthur River is shut down, Cameco's big facility, that number has now gone over 40%. So in essence, we are more than 40% dependent on Vladimir Putin and his confederates for over 40% of our nuclear fuel in the United States. And the really distressing part of this is that we have now gotten ourselves into a position where we import more than 98% of our nuclear fuel from outside of the United States. And again, over 40% of that coming from Vladimir Putin and his friends. That's dangerous foreign policy.
Yeah, I would say it's not only dangerous, but the major point to be made, I would say, is you are really dependent.
Extremely.
That's a problem. Even if it would be another country, you are dependent on somebody.
It's beyond dependency. Vladimir Putin has demonstrated many times that he will, for geopolitical purposes, when it suits him, shut off the supply of oil and natural gas. He's done it to Western Europe. He's done it to Eastern Europe, and some even at times even to his allies. So. We have no illusions about the state of the world out there. It's a dangerous and it's a volatile place. And for us to be 40+% dependent on Vladimir Putin for something as critical as nuclear fuel, keep in mind that more than 20% of our baseload in the United States, our electricity baseload, is generated from nuclear. So we are not alternative energy.
Yeah, that's right. So petition 232, what is that about and what can we expect? Because I think one of the deadlines, isn't it mid of April?
Coming up in April, yes. We filed the Section 232 trade petition. We selected Section 232 because actually it has very well-defined timelines. The investigation did not formally begin until July 18th of 2018. The Department of Commerce, from that date, has 270 days, or 9 months, to complete its investigation and make its report to the President of the United States. Right now we have a government shutdown. Might that impact that deadline a little bit? It may. We simply don't know yet. But then they have to make their report and their recommendations for remedies to the United States of America, who then chooses whether or not he accepts or rejects any and all of them, but he only has 3 months to make a decision. So you've seen where the Section 232 has been used in steel and aluminum, and in those cases they used the full 270 days for the investigation, but the President made his decision in 14 days. So what we liked about the Section 232 is that it has a finite lifeline, and so we know one way or another by the middle of this year this issue is going to be settled. And what it would result in, we hope that we would get a favorable outcome on the investigation by the Department of Commerce. And keep in mind, it's not just the Department of Commerce, it's also the Department of Energy, and it's the Department of Defense. And ultimately the Department of Defense will decide whether or not being 40% reliant on Vladimir Putin and his friends for our nuclear fuel is something that is in this country's national security interest. We believe that they absolutely will find it to be in the national security interest of the country. So we expect a favorable outcome, and the result of that favorable outcome would be long-term, higher-price lifeline contracts for companies like ours. And keep in mind, there's only 2 of us still producing in the United States, so the industry is really suffering right now.
Absolutely. Let's say for somebody who is not so familiar with Petition 232, the uranium market, how would that then, let's say, physically work? Yeah, let's assume everything goes through.
Yes.
They want to push you guys, they want to have the production ramped up, but you need higher prices. Would that mean, for example, then the state pays an additional amount per pound, for example?
That
or
we don't know yet.
We get 2 uranium prices, or how would that work?
No, you're really getting down to the nuts and bolts of it now, but you're absolutely right. And those would be the remedies that would be recommended by the Department of Commerce to the President. Now, they may choose that tariffs are the option that they want to pursue. We don't think so. We have asked for a quota. What we have simply asked for is that instead of importing 98% of our nuclear fuel from outside of the United States, we're saying, look, go ahead and import 75% of it, but preserve 25% of your consumption for the domestic producers. And what that would translate into would be long-term contracts that would be given to viable producers, legitimate producers that have nuclear permits and so on, and that are fully permitted. It's not going to be just somebody that says that they can produce and hope that they can. So there's only a few legitimate players that would receive these contracts, but it would keep the nuclear power industry and the front end of the fuel cycle alive in the United States, and that's critical. One of the things that's so important to understand here is that if we fail on Section 232, the United States loses its place at the table. And for example, what I mean is that since the beginning of the nuclear age in the 1940s, the primary deterrent to nuclear proliferation has been the United States of America. If the United States gives up the fuel cycle, if we lose the fuel cycle in the United States, we lose our seat at that table. Section 232 is critical. It's not just critical for the United States and for a company like ours, it's critical for the Western world.
Absolutely. Wow, that was a hefty final sentence. So
sorry about that. I'm a bit passionate about what I do.
No, honestly, I really like that, because this is the information we want to have for our viewers. Because for us, it's so hard to understand what is really going on finally. Because you see it in the press, you read it in the media, and you know Germany shut down as the only country in the world the nuclear power
and how's
plants.
that working out?
And honestly, I don't know, because everybody wants to have an e-car, and I have no idea from where this power should come.
Well, and you know what's happening in Germany right now is that they shut down their reactors, and so what they're doing is that they're getting all their excess electricity that's being generated by France on the border, and that's supplying them. You know, so they're finding that you can't run a great industrial country like Germany on wind and solar. It's just not going to happen.
No, it's not. You don't have the base load for it.
And if you want to address climate change, you need nuclear.
Yeah, especially the Chinese need that. Yeah, that's right. No, definitely. Super. Jeff, that was a great interview. Thank you very much. So it looks like that we have some interesting times 2019. I mean, you guys, when I look here at the photo also, you are set up for higher prices. You can produce. You have 10 years of mine life easily on a higher production rate.
We are ready to go.
You will make money.
Well, and we can. And look, if anybody's going to be able to make money, it's going to be us. And one of the things that we've done, which we are very proud of, is it's cost us money, but we've kept our operational staff on. So we are ready to ramp up at any time. We stand ready to ramp up. Not only can I ramp up faster than anyone else, I can do it at lower cost and at less damage to my shareholders than any other company out there.
Exactly, and I think the most important thing is you have the uranium you can deliver physically in the market.
Yes, we do, and we're building inventories. As a matter of fact, we have about 400,000 pounds in inventories of US-made production right now, so we are in a unique and very advantageous position.
Definitely. Great, thank you very much. All the best for that.
Appreciate you having me.
Thank you. Yeah, ladies and gentlemen, there was Jeff Klenda, the CEO and founder of Ur-Energy, and you heard it, the company is really well set up, and I think Jeff's work and also plan really to buy in the market and to sell, to fulfill his contracts, still with a beautiful margin of approximately $25 to $30. I think it's outstanding to do it so, because he has not depleted into his resources, never into his reserves. They have a 10-year mine life already, even at a much higher production rate. So let's see how Petition 232 comes out finally. But one thing is for sure, as he pointed out, this world, especially the US, they need much more domestic uranium and domestic production, and I think the Trump administration is going the right way here, hopefully then, and we will see how this comes out. Higher prices are set because demand is much higher than supply. That's always good for prices. Thanks for watching us. Bye-bye from Vancouver.
Thank you.